Good morning. Larry Morse here with the November 10th Good News Update. As I mentioned last week, today we would have a guest with us. Heath Lafort from Fairway Mortgage is here to join us today, and we'll be touching on several topics, one of which is the current good news, and that is mortgage rates. Last week, mortgage rates dropped, and Heath will speak to us a little bit about that. We'll also be talking about access to credit and what's going on out there from a buyer's perspective. And lastly, we'll be answering a question posed to us by Tony from Colonial Printing regarding refinancing. And Tony's question was, at what point does it make sense to refinance? How much of a rate decrease do you need to see to make refinancing worthwhile? Heath, why don't you talk to us first about what happened last week with mortgage rates and what you see happening in the short term?
Sure. Thank you, Larry, for having me this morning. Current interest rates yield roughly around 6.375 on a Fannie Mae mortgage today, and roughly on an FHA mortgage, you're roughly around 6.5% today.
Okay. What do you see in the short term, Heath? What do you think over the next several weeks we might be looking at with the change in the White House, with what's going on in the financial markets?
Sure. I feel that with the unemployment rate rising, that will put some pressure on the stock market. So we've been seeing some volatility in Wall Street, but I think in the long term, with unemployment rising, we'll start to see investors pouring their money into bonds, and that will put a downward pressure on mortgage interest rates.
Good, good. Heath, as everybody knows, with what happened in the subprime industry, access to credit has become much more difficult for people to obtain. At what level do you see access being more difficult? Credit scores, for example. Talk to us a little bit about the impact credit scores have on obtaining financing and what's happened with credit score ratings since the subprime market collapse.
Sure. Since the collapse, we've been seeing a lot of different things. Fannie Mae has certainly tightened up their credit standards. Anything 720 or below as far as a credit score is getting a pricing hit in the marketplace. I do feel that will change over the next 90 days. I think these pricing hits will change. I think the government had to slow down originations through Fannie Mae, and that explains why the credit score pricing model has changed, because the government sort of wants to slow down the activity because they felt that Fannie and Freddie Mac did go into areas that they shouldn't have.
Okay.
As far as FHA is concerned, FHA has always been a viable option for the client. But with activity slowing down through Fannie Mae and Freddie Mac, this has caused a lot of mortgage activity to go to FHA mortgages. FHA mortgages really haven't changed. The minimum credit score can be a 550 with no pricing hit. Actually, there is a small pricing hit on a 550, but a 600 credit score through FHA, you're not getting a pricing hit in the marketplace.
So FHA has really become a stronger option for those looking to finance who might have a credit rating that's slightly challenged.
Yes, that's correct.
Okay.
Yes.
One thing everybody would like to know when they see rates declining is, at what point does it make sense to look at refinancing? Tony from Colonial Printing posed that question after last week's update. She would like to know, if you could, what point does make sense. Now, obviously, the average rule of thumb is 1%, but averages don't apply to everything. So what would your advice be to somebody looking to refinance? What do they need to take a look at, and at what level does it typically make sense to refi?
Sure. When a client does apply with me, we tend to ask one of the most important questions, and that is, how long will you stay in your property? I think that really depends on what the theory is. Is it 1%? Is it 2%? And then behind the term in the house is, what are we financing? Because that will have a dramatic impact on the reduction to monthly payment and the recoup period.
So what you're saying then, basically, if somebody's looking to refinance $250,000, the same rate might not apply as if they were looking at $400,000.
That is correct. That is correct.
Okay. So as a range, at what point should somebody start to ask those questions then? Is it right for me to refinance? Is it a 1%? At that point, do they start to ask those questions? Or could they start to ask that at a 0.5%, for example? Where would you see the process beginning?
I think with any volatility in the market, we carry a no closing cost option in our company, which basically takes advantage of any volatility in the market for the benefit of the client. So we do carry a no closing cost option. If the marketplace reduces itself by 50 basis points, and we tend to get enough what we call yield spread premium in the back of the interest rate to pay for the closing costs, we will tend to do a no closing cost option, and it will be totally free for the client.
So with a no closing cost option, does the 1% rule typically apply for starting that process?
Yes, it does, because it allows us, the lender, to get enough revenue from our investor to pay for the client's closing costs. Thus, the client would get the lower interest rate.
Okay, very good. Heath, thank you very much for coming today. I appreciate your sharing your knowledge with us. For those of you who don't know Heath, Heath is also a financial planner and has done a wonderful job representing many of the clients who have gone through the buying process here with the Larry Morse Group at Keller Williams Realty. If you'd like to find out more information regarding Heath and his services, you can access Heath's website right through the Larry Morse Group's website if you click on the mortgage pre-qual link. Well, thank you very much. Look forward to bringing you some exciting news next week. I have a surprise for you next week. I'm going to be sharing with you some information on a personal hobby that I think you will find very, very interesting. So I hope you come back to watch the November 17th update, and thank you very much. Have a great week.